I think a big data point for the markets last night from the US. It comes after that disappointing PMI that we saw earlier in the month. And then we had those hawkish remarks from Chairman Powell at the Jackson Hole conference. So I think the markets at this point were a little bit confused as to which direction the Fed policy goes from here. And they've been taking this data points from yesterday from JOLTS as well as the consumer confidence as a confirmation that the Fed will not hike more from here. While, there are certainly some indications that the labor market is loosening. You said it correctly. It's very slow. The market is cooling, but it's still not cool enough. There are some other signs as well, which are pointing to the fact that we could see a slowdown in consumer spending into the fourth quarter or early 2024 because, credit card debt is going up higher. And we see that consumers are running out of excess savings, and they are there's also signs that student loan forbearances might be ending soon. So that does put the question mark on consumer spending going from here. But I think the big question that the markets still need to answer is, while we are moving from that no landing to a soft landing kind of scenario expectations in the US, is it something like that we could really get, or are we should be really concerned about something like a recession or a stagflation as well?
Charu, I hear you, and you know what? I'm sitting here with my glass. I thought it was half full, and now listening to you, I'm worried it's half empty because I just listened to you about the consumer beginning to. And here's my glass for the viewers who want to see it. The credit card debts, the student forbearance ending. What you say, the labour market starting to crack, and I'm thinking to myself, I hear what you're saying. I have a lot of sympathy for it, but is the labour market really cracking? I just want to go back to one of the key details in yesterday's JOLTS data as well. Job openings fell to 8.8 million. That is still 1.6 million more job openings than we had in the average throughout the entire 2019, before the whole of COVID, before the war, before the price changes. That's still a really, really robust jobs market, Charu.
Totally. There are, like you said, both sides have some weightage, right? You could say that we are starting to slow down from an over 9 million kind of print we've seen. But at the same time, JOLTS numbers are extremely volatile. So that's why I think this is more a confirmation of whether what we got from PMIs had a bigger weight for the markets, or what we got from Jackson Hole had a bigger weight. And this is leaning the markets towards that PMI story, which kind of hinted towards the fact that the economy is slowing down. More importantly, I think the number to look at in the JOLTS market report is the quits rate, which is also slowing down, which shows that the workers may not be tempted enough to go out and start looking for jobs, which again means that wage pressures are likely to come off. So again, there are some initial signs, but I think it's too early to make any conclusions. And especially this week, when we have the NFP due at the end of the week, I think we have to wait for that to really make any confirmations about which direction also we are going in.
Yeah, spot on, Charu. Where are defensives? I know that you are calling for a light stagflation to play out and overweight defensives versus cyclicals. Where are the defensives in this market?
If you're particularly looking at the U.S. market, it's been a very overweight story in some particular stocks, and there are a lot of good quality names. So of course we have to look out for some of the sectors and names that do not have had the have not had the valuation advantage so far. So I think certainly something like in healthcare, in consumer staples, certainly very interesting. Energy also continues to be quite interesting, and utilities also comes into play when we're talking about defensive sectors.
Charu, I want to pick up on one of your points about the pain moving from tech to manufacturing to the consumer and circle back to tech, because we saw a lot of movement overnight in NVIDIA. Is this what's going to play out every time NVIDIA inks a new deal, that we see another record high on the stock, which makes you question how much more is now left? Have we missed a trick? Is there actually going to be more momentum in the AI story than what the market has anticipated today, even though there are still concerns about overblown valuations at this point?
Absolutely. There's no denying the fact there's a lot of potential in that AI story, which is still expected to unravel in the coming weeks and months and years. But where do we get the value of that in the equity markets is going to remain the big question. And as we look at NVIDIA, I think it's also become a lot of speculation playing in that particular stock right now because of the kind of run that it has had this year. So I think understandably, it remains hard to kind of guess work where it goes from here. even though I think the earnings this time were again blockbuster, the kind of outlook that they've given is still amazing. But again, given the point that, the valuation is a bit stretched, I think we have to start being selective within the AI space as well.